I'm going to make a second video today, but in this one I want to look at the stock market. A lot of people are assuming that we're in the final bubble phase of the stock market and we're getting ready to crash, and I'm just not in that camp, not yet. I'm going to show you two examples here of the bigger the base, the higher in space. And as many of you remember, when the NASDAQ broke out above this 2,000 high, I made the call. I said 10,000 is going to be a piece of cake, and 20,000 isn't out of the question. Nobody at the time, this was back in 2016, 2017, nobody at the time believed me. They thought I was crazy. No way the NASDAQ is going to 10,000, and absolutely no way it's going to 20,000. Of course, now we know that I was correct. The NASDAQ did get to 10,000, and it looks like now it's probably headed to 20,000, and it may get to 30, 40, or 50,000 before this bull market is over. The last secular bull market lasted, arguably, in nominal terms, it lasted from 74, which was the nominal bottom of that secular bear market, to the top in over here in 2000. That was a 26-year bull market. The Dow, I think, went up like 20 times, maybe, something like that. 20-fold. This is a huge basing pattern. Almost 17 years, I guess. I think a 17-year bull base is going to drive a bigger move than just this. Just a move to, well, we're closing in on 1700, and right now we're holding the breakout above 1600. I know that there is, or I still assume that there is a 4-year cycle low ahead of us. Maybe this year, maybe next year. Maybe I'm wrong. Looking at this long-term chart, one could make a pretty convincing argument that this was the 4-year cycle low right here. It would be a pretty short 4-year cycle, having occurred in just a little over 2.5 years. Seems pretty short to me. That's why I'm assuming that there's going to be another serious, some kind of serious crash event. These extreme right translated cycles, which this would be if this is not the 4-year cycle low, it's going to have some kind of crash event, because it's the 4-year cycle has just run out of time to produce that 4-year cycle low. And so these extreme right translated cycles, they tend to crash at the end. So I'm still assuming we've got a 4-year cycle low ahead. I may be wrong. This may be the 4-year cycle, and now we're in another 4-year cycle. But I just, we haven't gone 20-fold yet. We haven't produced, in my opinion, nearly a big enough move for a base of this size. We've got the technological advance driver for this, which is AI, and I think probably nanotechnology will come in at some point as well. So we've got the innovation, like we had back here. We had the internet and the personal computer that drove this bull market. We've got the driver for this bull market, AI, and like I said, nanotech, and we've also got money printing. So I don't think this bull market, I don't think we're in the bubble top yet. It does look like we're possibly going to hold this breakout above 1600. Maybe we make a run to 2000 before we get, hopefully anyway, the crash into the 4-year cycle low. And now let me go over to another market, but related, tech related. again, that same thing, only a bigger base. This is the semiconductors. We had our top back here in 2000, and now the semiconductors are driving this this innovation in artificial intelligence. And again, a 19-year base, I think, is going to just produce a much bigger move than just to 5,000 here. I think this has got to go to 10,000 or greater. And right now, we are holding the breakout above 5,000. So it's not unreasonable that the semis could possibly get to 6,000 before this intermediate cycle tops. And if I look at the bullish percent for tech, we are not even remotely close to being overbought yet. I do realize we're getting stretched quite a long ways above the 200-day and the 200-week moving average on the stock market. But as we all know, you can stretch a long ways before you get these major 4-year cycle lows, and that's actually one of the drivers that could produce that move down into that 4-year cycle lows, that we just stretch price way too far above the moving average, and then we get that violent regression event that takes us down into that 4-year cycle low, and then that creates the fuel for the next leg up. So I would say that this move down into this correction was the fuel for this big move here. It created a lot of bearish sentiment. I think a lot of people are still looking at this correction and assuming that the bull market's got a top and it can't keep going higher. And just like I think the huge base in silver is going to drive a monstrous move to, again, I'll say again, $100 silver is going to be a piece of cake. 250 is not out of the question, and $500 silver is entirely possible when we get into that final bubble phase. I think $10,000 on the semiconductor is completely possible during this bull market. So it's kind of a shame that many people are tunnel visioned on one asset class, and by that I mean they're tunnel visioned on precious metals, and they are missing some opportunities in other areas. I think there's a big opportunity in uranium. Not sure it's ready to break out and run and give us another leg up yet. Reluctantly, there may be a big opportunity in Bitcoin too. Again, I'm not sure that that's ready to break out and go to 100,000 yet. But if we could get a good correction in Bitcoin and uranium, I might be interested in playing those areas aggressively. Right now, I'm very, very bullish longer term on the precious metals. They're at least in a sideways consolidation at this right now, so I'm not expecting another huge leg up just yet. The stock market, and especially semiconductors, are still fairly early in their intermediate cycle. They're not terribly overbought, at least based on like the bullish percent momentum levels, and I'll show you that here real quick. So I'm fairly bullish on this intermediate cycle. I think it's got more to run, and I'm looking for possibly a run to 10,000 on the Nasdaq, or 20,000. That 20,000 target that years ago I said was definitely a possibility, and maybe this breakout at 5,000 is going to hold on the semis, and maybe we make a run to 6,000 here before we get our next major correction. All right, so I'll finish this video with a look at the bullish percent. This is not a sentiment indicator. It sounds like it's a sentiment indicator, but it's not really. It's an overbought, oversold indicator. It measures the percentage of stocks in the index that are in their point and figure buy or on point and figure buy signals or point and figure chart sell signals. And you can see, it's not unusual at all for rallies in the tech sector to drive the bullish percent to 80% or above. and we're still very mild at only 60%. So there's a lot of upside yet in the precious metals. On the other hand, in the tech sector. Now, on the other hand, in the precious metal sector, this bullish percent is closing in on 85%, which is pretty steeply overbought. And another reason that I'm not really willing to play the precious metals sector aggressively right now. I'm happy to let my physical gold and silver catch. If there's any more of this rally, I'll just let my physical gold and silver catch that. And at some point, the bullish percent will come back down in the metals. Maybe it'll come back. I don't know that it's going to come back down to 20 anymore, because we're in a breakout phase in the metals. But it might come back down to 40. And then at that point, I think you've got a setup where you can get really aggressive in the metals and take some leverage, and like we did at that March 1st bottom. But metals are really not set up well for really aggressive trades like right now. But the tech sector is, in my opinion. And as I've shown, huge bases in the stock market and the tech sector. And I think, based on the last two secular bull markets, the last one ran 26 years. This is only, about 15 years. I think we got further to go, probably much, much further. AI is just getting started. We're not even hearing a lot about nanotech yet. So I think there's a lot of innovation still ahead for this secular bull market in stocks. And I think it's got a considerable amount of years yet to run. And those huge bases that I pointed out, I think are going to drive much, much bigger moves before this secular bull market's over with.